Welcome to another episode. My name's Jose Najarro, and today we're going to do a quick video on Gamestop earnings. Like always, I have my buddies Bull Solo and Darth Bear ready to keep track to see how the company's doing. So let's get started. Alright, just to begin, all the information I collected comes from GME's investors website, Seeking Alpha, MarketWatch, or LazyFA.com. First thing we're going to take a look at is stock returns. I'm doing this video, which was last updated December 20th, which was a Sunday after the market closed. GameStop ended at $5.91. In the past 5 days, it's returned about 10%. The past month, 5%. In the past 3 months, 27%. The real kick here is year to date, this company is down 52%, and in the past year is down almost 50%. So this company has definitely taken a hit in the past year, and let's see if why this hit happened and if it's time to get into this stock. So now we're going to talk about revenue. Revenue has missed in both earnings per share and revenue. Q3 earnings per share was 49 cents, and it missed by 66 cents. That's a ridiculous price. Execute order 66. Sorry, I've just been watching Star Wars. I have that in my mind right now. Let's take a look at GAAP earnings per share. It's negative $1.02, and it missed by $1.24. This is ridiculous. This company is bleeding, and that's definitely not a good thing, right? I took a look already at the company. Obviously, I did this power presentation, but there's going to be some light at the end of the tunnel, hopefully. Revenue was $1.4 billion, and it missed by $180 million, which is not much compared to that 1.4. Actually, it's about 10%, so that's actually a big percent. Revenue is down almost 26% year to year. That is scary. That is super scary, and for that reason, the first point obviously has to go to Darth Bear. We have a miss in earnings per share. We have a miss in revenue, so no way Bull Solo gets this point. Darth Bear is taking the lead. All right, so next we're going to take a look at comparable sales. Like I mentioned earlier, total sales have declined 25.7% compared to the same time last year. We take a quick look at numbers. November 2nd of this year, sales was $1.4 billion. Same time last year was $1.9 billion. That is some ridiculous number. Q3 comparable sales was down negative 23.2%. compared to what analysis thought was going to be a negative 13.4%. So these sales were these sales declined a lot faster than anticipated, right? Analysts anticipated 13.4%. It actually dropped down 23.2% in comparable sales. The first main thing was new hardware. So new hardware are just like new consoles, PlayStation 4, Xbox One, and the Switch. New hardware sales fell 46%. Same time last year was 350 million. Right now it's 190 million. So it fell almost down 50%. And that's to be expected, right? Because we just got released. We just got the new we just got the news that there are new consoles coming out. So now people obviously are going to hold back and not buy anything at the moment. So that's the main reason we have new hardware sales. The next thing is video games. New video games sales are down 33%. And for the same reason, right? People are not buying as many new games, and there are weaker title games coming out right now because everybody's waiting for the new console. So it's down 33%. Accessory sales decreased 13%. If we take a look here at this revenue chart I have, the only one that seems to have increased in the past quarter is collectibles. Collectibles same time last year was $155 million. We're right now sitting at $161 million. So only an increase of about $7 million is not that much. But I guess it's good to know that there's still some growth going on. But still, we see that huge decline in sales, and obviously another point for Darth Bear here, and he's killing it right now. GameStop does not seem to be doing all that good. And just so you guys can, if you guys are listening to the podcast, just so you guys can see the numbers, right? New video game hardware sales last year was 350 million. This year was 180 million. New video game sales last year was 720 million. This year is 485 million. And pre-owned games last year was 397. Right now sitting at 344. So you can see where these are the major ones that these declines are coming, and they're declining pretty fast. So next, some quick things to note. I only have one point here. The next I'm going to talk in the future plans. But right now, GameStop has begun the process to close down operations in the Nordic regions of Europe, including operations in Denmark, Finland, Norway, and Sweden. So that's just good to know for any other investors out there. So future plans. Future plans is something that I always give a point to Bull Solo. And the reason is it's always good for a company to have a future plan, right? I'm not a fortune teller, so I can't tell if this plan is actually going to work. I might like it, but I'm not the full consumer. So even if I like it, other people might not like it, or they might not do it correctly where it actually produces great results. But at least they have a plan to go forward. The first thing they want to do is optimize their core business, right? So the first thing is they want to optimize the core by improving efficiencies and effectiveness in everything they do. I honestly, now that I read that, I don't think that should be a number one point, right? That should just be the company's overall goal, right? Any company should always work into improving everything they do. So that was pretty dumb. I like this point number 2 though. Point number 2 is to create the social and cultural hub out of GameStop. And that's actually pretty good. I like this idea, and I hope they work on it more in the upcoming quarters, because I feel like this is going to be something big. So this is just saying that GameStop at the moment is just a brick mortar store, right? But there's no point in going to a brick mortar store anymore, right? You have GameStop, you have Best Buy, you have Amazon, you have all these stores where you can just purchase online. What GameStop wants to do is they want to become this place where you actually come and socialize about video games, which I think is a very cool thing, right? There might have like gaming tournaments. They might have something that gets people inside the store. And once they're inside the stores, then people are going to be like, hey, might as well pick up here from this. So that's super smart. And I wish Toys R Us was the company that had all these toys. So I wonder why Toys R Us didn't do something like this. If Toys R Us would have done something like this, where maybe they would have done like a weekly come play Lego contest or something, they would have had more people coming in, and maybe it could have saved the franchise. But that's where I believe this is such an important thing, and I want to focus on this, and I just hope they focus on it pretty strong. Third, they want to make their digital ecosystem very frictionless so they can reach customers. Obviously, that makes sense. Everybody's trying to do this. They launched a new website in September, and they have seen increase in conversion rates and average revenue per users, along with longer browsing time from the customers using the site. I don't shop for many video games, but I do like their new website. I've gone there a few times right now, buying through the holidays, and I do gotta say, I do agree that the new website is pretty good. Next, they want to transform their vendor and transform our vendor and partnership relationship for future of gaming. So here they just want to get good relationships with the partners of these video games, that maybe they might get exclusive items or some exclusive offers that they are willing to offer, so people will come to them. Again, that's pretty good, but they've been doing this, so this is not that something that impressive. To me, the most important thing is point number 2. These are pretty good, and for that reason, I'm gonna have to give a point to Bull Solo. He has at least 1 point now. Next, let's take a look at shareholder return. The first thing is I did a video, I think about 2 quarters ago, about GameStop, and back then their dividend was about 11% that they were given. Since then, dividends have been cut out, so this company has no dividends whatsoever. But look at this, and these are quotes that they've said during their earnings call. We took advantage of our depressed share price during the quarter. This company has bought so many of its shares in the past quarter alone that is ridiculous. And for them to say, hey, we're buying our shares right now because we believe they are so they're so undervalued. And that alone triggers me. It's like, hey, the company thinks that it's undervalued, then it definitely is undervalued, because who else knows the company more than the company? And the great thing is they're putting their money where their mouth is. The first thing is they accepted $12 million shares to purchase at a price of $5.20 per share for a total of $62.9 million. That was the first thing. So they bought 62.9 at 12 million. The second is they purchased $22.6 million, totaling $115 million worth of shares. So 22.6 million shares they opened in this quarter for an average price of $5.11. Listen to this. There's only 82 million shares left. There's only 82 million. Previously, they bought 22.6. So they bought about 1/4. Would it be 1/4? Yeah, they bought about 20% of total shares in just last quarter. They bought 20% of their total outstanding shares last quarter alone. Next, they still have $121 million to do for purchase of more shares. At the current price, that was at $6. This is the $6 that we saw at the beginning of this video. If they were to buy $6 worth of shares, at an average price of $6 worth of shares, this company will be able to buy 1/4 of their total shares. That is ridiculous. That 80 million shares will drop down to 60 million if they do this. So this company, I'm pretty sure, is going to continue to buy back this stock. If it drops below $5.50, this company will pick up. And for that reason, I'm going to have to give another point to Bull Solo. Next, we're going to take a look at this company's debt. This company has total cash and liquidity of $703 million. That's including about $290 million in cash and $413 million in credit. One thing I want to take a look at is cash is definitely burning down. In same time last year, this company had about $448 million of cash. Right now, it's sitting at $290 million in cash, about a 40% decrease in cash and cash equivalents. So this company is definitely taking a beating in cash, and that's something to definitely keep an eye on next quarter, how much more it's burning. The next important thing is at the end of this quarter, the company ended with total debt of $419 million versus $820 million at the end of the third quarter of 2018. So that's what I like to see, right? They dropped down their total debt by $420 million. Almost, let's say actually $400 million. So they dropped down debt by $400 million, but they only dropped cash by less than $200 million. So that math is really good for me, but it's good to see that only $200 million dropped down in cash and they dropped down $400 million in total debt. That is good news, and for that, I'm giving another point to Bull Solo. All right, so here we're going to take a look at the outlook based on the company, and here's again where some more red happens. Looking ahead, GameStop sees sales decline in the high teens versus the low teens that they prior see. So they see that this slowdown is going to be heavier than they anticipated. They had originally expected earnings per share to be $1.15 to $1.30. Now they're expecting 10 cents to 20 cents. That is ridiculously low. And it's definitely not looking good for GameStop. They are revising their outlook for the year down from prior expectations. It's never a good thing to see a company drop down their guidance. And they do say that while the near-term top-line environment looks really bad, which yes, it does. Imagine dropping your earnings per share estimates from $1.15, $1.30 to down to a dime. That is ridiculous. They do say that they do not believe these results are indicative of what they would expect the full business in the long term. That's obviously right now the facts are this company is going down in its earnings per share, and even though they don't believe this, facts are facts, and for that reason, another point to Darth Bear at the moment. Next, let's take a look at outlook based on analyst, and the first thing we're going to see is earnings per share is growing. Right, so for this year, they expected that the analysts expect 13 cents, which is around that 10 to 15 cents, which GameStop says they would get. But for January 2021, they expect 57 cents of earnings per share. So that's a huge increase. So earnings per share is growing, and the forward PE ratio at the moment with that $6 price range was 10.48 PE ratio. For me, it's kind of high. For my taste, it's different. Next, we're going to take a look at revenue growth. Revenue growth is on the decline, but not by much. This year is expected $6.64 billion, and next year $6.3 billion. And then, even though this is one thing, right now we can see that the company is trying to pay down. Right now, it's paying down a lot of expenses, because even though revenue is dropping for the next year, earnings per share is increasing for the next year. So then it seems that next year this company is going to have a lot less stuff to pay, so it'll be able to keep a lot more of its money. And again, I do like to see that earnings per share estimates continue to rise up and not a huge decline in revenue. So for that reason, another point to Bull Solo. So now my thoughts. Again, just like every time, cons always seem to have a smaller list, but those cons are usually so heavily weighted that they don't need that many. Pros are, so let's start with cons. Decline in revenue and earnings per share. To see that decline and to see a decline bigger than anticipated, it's never a good thing, and that's something to keep in mind. They do have, they still have at least a year before the new consoles come out. So they still have a whole year that they're gonna bleed so much money, and that doesn't mean that when the new consoles come out that they're gonna start unbleeding money. We don't know what's gonna happen, but at the moment they're still gonna, at least we know for a fact they're gonna continue to bleed money for at least one more year. And like we also saw, cash is burning, right? From 400 and something million to 200 and something million in cash. That shows that cash is burning. So now the pros. Besides the cons, this company definitely has some pros. The first thing that I like, and I always like to see, is the company's paying down is debt, and it's not increasing, it's not taking out more loans, and the cash is not decreasing as fast as total debt. So that's one good thing. The company believes their price is undervalued at $5.20. The company actually said that they bought company shares because they believe their shares are undervalued. So this company believes that any shares below $5.11 are undervalued. So obviously, if that's the point, then I gladly would pay $5.11 for this company. I like their future plans, and my favorite one is that they want to create that whole culture social club for GameStop, which I think, if implemented correctly, can actually bring a lot of customers to the store. And finally, what I would pay for this company, I think I would pay a forward PE ratio of lower than 9 would be my fair bet, but anything around 7 PE ratio. So if this stock hits around $4, I would definitely increase my positions. But anything at the moment, I think it might be too overly priced. Just because the company is not at the value, just because I would buy below 7 doesn't mean I would sell above 7. I would sell this company at a PE ratio of about 13. That would mean that I would double it to what this company I think is worth. So yeah, I hope you guys enjoyed this video. Let me know what you guys think. Let me know what stocks you want to take a look at next. I know someone asked to do Nvidia. I'll take a look at them in the upcoming days. Take care, have a good night, and see you next time.